Alright, just wanted to record this quick video going over some of the great trading opportunities today. The one trade I want to highlight today, the one that was probably one of the best trades of the day, was the VIX trade, VXX. The VIX setup in a number of ways today, and I think it shows a few good lessons, so it's worthwhile to record this video and to review this. So the VIX this morning gapped up, and of course the VIX is the ETF tracking the VIX index, volatility index. The markets gapped down, the overall markets gapped down this morning, about 1% to the downside. And the VIX, of course, being the inverse, gapped up over 1% to the upside. And so they gapped up on high volume, and that made its way on our stocks and playlist. So we were watching this particular stock play out. And the VIX really set up in a couple of ways nicely today. So in the morning, probably took about a good 2 hours here, and I'll just draw it in really quickly. It really didn't do much for the first couple hours. It really just coiled in a range. And this coiling is a very, very predictive pattern. It's what I call a symmetrical triangle, right? So we draw it from there like that and like that, and you can see the triangle formation there. Once it broke to the upside down, it was really, you know, that was it for the consolidation. It was gone for the rest of the day. It was off and away. If you didn't catch this particular first break, and I personally did not catch this break because I wasn't looking for it, I was concentrating on some other things. But I happen to have, you know, my other favorite setup that I like to trade a lot is the early bird setup, where I'm looking for the break of the 2-minute opening range. We had a few of these breaks here, which were false breakouts. They were not gaps. They were not breakouts and goes. They were false breakouts. And in fact, what the market was doing is it was actually consolidating again in another symmetrical triangle. All right. And then when it broke to the upside this time here, when it broke to the upside on this particular bar there, then it really went to the upside at that point. It really, you know, was off to the races. And using the early bird setup, you would have got in a little bit early, and you would have really been able to manage your risk well. On this particular bar right there, I'll just zoom in a bit more. We're talking about this bar. That's a perfect early bird setup play. We're risking 1.3 R on an early bird setup. We'll draw in our risk to reward lines and our targets, and using the 251 trailing approach, we would have got out probably about nearly hit 8R. I'll just make sure I drew it in absolutely perfectly here, so we're not trying to overshoot things. And yeah, so it looks like we would have got about 7R out of this trade. So using our trailing stop approach, the 251 approach, we would have gotten out right there. And that's a beautiful 7R trade. Took less than an hour to unfold. All right. So that's, you know, a classic early bird setup. Although in this case, it's really not an early bird. It just took time for that play to play out in today's market. Now, moving forward, in stocks like this, when they're in play and they're really moving well, we want to be keeping our eyes on them throughout the day for additional entries or pullbacks, because it's possible for these things to continue to run. So long as a stock isn't fundamentally breaking down, then we want to definitely be looking for more opportunities. And in fact, we saw another opportunity set itself up perfectly here. So another very predictive price pattern that I like to watch out for is what's called a broadening wedge. So a broadening wedge is pretty easy to spot. If you draw it in here, I'll just draw the lines. You can see there. And a broadening wedge is another word for it is a megaphone. So if we take a look at that, we can see this megaphone pattern right there appear, where you have a broadening type of pattern, where you have that type of appearance there. And typically, a broadening wedge, you want to buy it on the break of the lower high. So if I draw it in here, for instance, you'll see it in a second. If we draw it in right there, sorry. On the break of this level becomes the broadening wedge begins to expand and it becomes a buying signal. So the break occurs here, and really you have some buying, you have some opportunities to buy in this area here, and once this area gets cleared, it's really off to the races, right? Here's your message bar right there. If we draw our risk to rewards again on this message bar, we can see that that trade would have worked out for another 5R. So based upon how we scale our trades, or well 4R, based on how we trail our stops using the 2-5-1 approach, it hit 5R, and then we would have got stopped out for 4R. So that's another good 4R trade. And again, that one took again next to no heat once it got going. So this is why it's important to understand and study these predictive price patterns, because there are very, very good setups that happen intraday, every day, if you're patient for them to unfold. And secondly, again, the point being, when a stock is in play and they don't fundamentally break down, we want to be looking for more opportunities to get involved in that stock. Hope that helps.